Hello everybody! Since you clicked on this video, you might be a beginner investor, you might not know exactly where or how or what to invest in. Putting your money into the stock market can feel super intimidating. I totally get it. I've been DIY investing for 7 years now. I started when I was 19, so trust me, I know exactly what that nervous what if I mess up feeling is like, because I didn't want to lose any money. In this video, I'm going to walk you through 3 ETFs that I think are perfect for beginner investors. These are simple, straightforward, and a great way to dip your toes into the stock market. Also, investing is intimidating too because you're not sure exactly what you're investing in, but as I talk about these ETFs, I'll also show you what they hold and give you an overview of why I think they're great for beginners. But before we dive in, just a quick disclaimer, I'm not a financial advisor. What I'm sharing is based on my own self-taught experience as a DIY investor over the years. Think of this as the advice I would give my best friend if she came up to me and said, okay, I have $1,000, what should I do? I can already hear my best friend saying there's all these terms flying around, stocks, ETFs, dividends, MER fees, it's a lot. Let me ease your nerves a little bit. We're keeping it simple today. I almost promise you're gonna understand every word I say. When you're just starting out, ETFs, exchange-traded funds, are your best friends. They're essentially a basket of stocks. Instead of trying to pick the perfect stock, which, let's be real, is a hard skill to learn, you get access to a whole group of stocks in one go. All right, so if I had $1,000 to invest and I was starting from scratch, here's how I'd break it down. We're going with 3 ETFs. First, VDY. It's a Canadian listed ETF that tracks the S&P 500. When you buy this ETF, you're essentially putting your money into the top 500 companies in the US, so Apple, Microsoft, Amazon, etc. You're basically betting on the entire US economy, which has historically done pretty well over time. Let's look at an overview of VFV. VFV, Vanguard S&P 500 Index ETF. This is the Vanguard page here. The price of Vanguard right now is $153.88. The MER is 0.09%, which is peanuts compared to other managed funds. MER stands for management expense ratio. So how much you'd be paying is, let's say you put $10,000 into VFE. Every single year they take $9 for managing this fund. There's 500 companies, right? Distribution per unit. So distributions is basically dividends. They pay 36 cents every quarter, meaning every 3 months, 4 times a year. And if you scroll all the way down, these are the holdings that they hold. And there's 504 holdings in this ETF, but the top ones are Apple, Nvidia, Microsoft, Amazon. I'm sure you guys know these companies. You can see here that there is different sectors. This is the geographic exposure. It's North America because it is US stocks. Yeah, so that is VFV. If you're finding these videos helpful, make sure to hit that like button and subscribe for more videos like this. Next up, a dividend ETF. Now, dividends are what a company pays you just for buying and holding their stock. When you hold a company's stock, you're a part owner, so you get a part of the profits as well. VFV gives dividends as well. It holds some companies that pay dividends, and not all companies pay dividends. In Canada, I love the ETF, the dividend ETF, VDY. Here is VDY, Vanguard's FTSE Canadian High Dividend Yield Index ETF. So what this fund holds is Canadian high dividend yield stocks. So the price right now is $48.71. MER is 0.22%. The stocks it holds is, go way down. So RBC, TD is obviously good dividend payers. The financial sector is good dividend payers. So is the utility sector, Bank of Nova Scotia, Bank of Montreal, CIBC. Again, yeah, just a lot of utility companies and Canadian banks here. And there's a total of 53 holdings. Again, MER is peanuts, and you get 4.25% dividend yield. Why this fund? Seeks to track the performance of the FTSE Canadian High Dividend Yield Index to the extent possible and before fees and expenses. Seeks to track to the extent reasonably possible and before fees and expenses the performance of a broad Canadian equity index that measures the investment return of common stocks of Canadian companies that are characterized by high dividend yield. Basically, it's just saying that it holds dividend high yield paying companies. If you're in the US, check out VYM, which also focuses on high dividend paying companies in the US. Okay, so for US VYM, Vanguard High Dividend Yield ETF, the website looks a little different compared to the Canadian website, but this is, I guess, the US version of VDY. Overview. It's at $127.17. Expense ratio is much lower than the Canadian one, 0.06%. Wow, number of stocks, 537. Let's just see what they hold. So, right, these would be the high dividend paying stocks in the US. Johnson & Johnson is a popular one. Walmart, Procter & Gamble, ExxonMobil. Yep, I used to own these stocks as well. This is the US version of VDY.
Dividend ETFs are great because not only do you get potential growth, but you're also earning some passive income along the way. Now let's talk about growth, because who doesn't want a piece of the next big thing? That's where TEC.TO comes in. TEC is all about tech. Microsoft, Nvidia, Tesla, you get it. These are companies shaping the future from AI to cloud computing. Now, growth-focused ETFs like TEC come with more risk, but they also come with higher potential rewards. So if you're okay with a bit of volatility, you'll be fine. I personally believe that tech will continue to grow.
Okay, here is TEC.TO. It closed at $47.57 today. MER is 0.39%, not that high. C risk analysis here is between medium and high. They do pay a dividend. I just don't know how much. Over here, it's mostly in technology, in the United States, obviously. So Apple, Microsoft, Nvidia, Amazon, Meta, Tesla. And trade this in Canadian dollars. Dividend yield is at 0.55%. This is the TEC ETF.
So here's what I would tell my best friend to do. $400 into VFV for stability and broad market exposure, $300 into a dividend ETF for the dividends. My best friend actually sends me screenshots of her getting dividend payments. And $300 into TEC for some high growth potential. And of course, I have to say this, always do your own research and know your own risk tolerance. Now, I know what you're thinking. Okay, but how do I actually buy these? Don't worry, I've got you. First, you'll need a brokerage account. A brokerage is just an app where you buy and sell stocks. It's like an Amazon for when you buy products. It's literally like an online shop. I use Wealthsimple because there are no commissions on trades and it's super beginner friendly. I've used Wealthsimple for 7 years now. Once you're set up, it's as easy as searching for the ETF, VFV, VDY, TEC, and hitting buy. Seriously, that's it. You do have to open a registered account. I highly recommend the TFSA for beginner investors so you don't have to deal with the taxes. I have a everything you need to know about the TFSA YouTube video that I'll link. And by the way, for Wealthsimple, you can use my referral link to get $25 when you deposit $1 or more. I'll link it below. The hard part isn't the mechanics. The hardest part by far for anyone is staying consistent and not freaking out when the market dips. Classic beginner mistake. Because spoiler alert, it will dip at some point. That's just how investing works. Here's my best advice for beginners. 1, don't try to time the market. It's impossible unless you're like a pro trader like my friend Shay. Just keep investing regularly, even if it's a small amount. 2, reinvest your dividends. So when you see those dividend payments hit your account and you want to spend it, don't. Put that money back into the stock market. And 3, be patient. The magic of investing is in the long-term growth, so don't stress over the daily ups and downs. All right, that's the plan. 3 ETFs, $1,000. You're officially on your way to building wealth. Also, let me know in the comments, what's the first ETF you're planning to invest in, or what was your first ETF? I'd love to hear about it. See you in the next video.